I'm excited to have Joe Dormani from Thomson Reuters Ventures here to talk a little bit about a variety of things, including trends in the venture capital industry and his professional career. But Joe, just welcome to the program. And just as we start things off, how long have you been in New York? And are you a Mets fan or a Yankee fan?
Thanks, Jack. Happy to be here. I actually recently moved back to New York. I spent a couple of years in Switzerland. So I just moved back to New York at the beginning of this year. But before that, I've been a New Yorker my whole life. So happy to be back in town, and definitely a Yankees guy. Baseball, big fan of baseball growing up. I haven't been as dutiful in following the Yanks as of late, but growing up, for sure, a Yankees fan.
Is the U.S. Open sort of taking over the city? All the activities around Serena. I don't know if you're making your way to the tennis court, or is that, tell me a little bit about activities in New York right now. Things are obviously starting to open up again, and now that we're beyond the pandemic.
Yeah, I think the U.S. Open is great. New York is vibrant right now. Being here is super energetic. I think it feels like there are more and more young people moving back to the city. There are meetups going on. There are companies moving here. It feels like New York is really coming out of the pandemic, in a really strong way. Now, doesn't mean that the city's got no problems. There's always things that we can improve on, but I think it's a super exciting time to be in New York.
I have a college-age son, and all of his friends are talking about getting internships in New York. So, it sort of validates your point that I think the next generation is looking to find their way there, at least for a summer internship, if not more. Maybe you could talk a little bit about your sort of professional career. You've led this sort of accelerated journey, leading, Thomson Reuters Ventures. Tell us a little bit about your journey along the way.
Yeah, I've had a pretty fortunate career. Being a VC is, for me, career-wise, kind of had always been this aspirational thing that I had wanted for a very long time. And I felt like what I had been trying to do for, maybe a little bit longer than the last decade is kind of build up all the skills that I felt were necessary and relevant to be a successful investor in an early stage company. So I have operated my own business. I have worked at a startup. I have done the sort of MBA thing and, financial consulting for a little while. I wound up at Thomson Reuters after my MBA about 7 years ago now, which have just flown by in what was then a rotational program where I got to work in different parts of the business. So I got to see, pretty broad perspective of Thomson Reuters, the corporation, and a variety of different roles. And since then, I've worked on product strategy. I've been in corporate development roles. I've been in corporate strategy. I've done M&A. So, I've done go to market stuff. So I've gotten a chance to see different parts of the business, different functions of the business. And, all this time, I've been sort of doing my own angel investing and working with startups and accelerators in New York City. And, when it came time for TR to launch our fund, they really sort of couldn't tell me no. Once they started, thinking about how to really make it happen. So, I've just been, like I said, super, super exciting, super fortunate in my career journey so far.
So Thomson Reuters establishes this corporate venture group. Have you branded it TR Ventures? Is that how it's?
Yeah, I mean, it's Thomson Reuters Ventures. I think we refer to it as TR Ventures more so than a formal branding thing. But yeah, it's
okay. And was there a specific, as part of the investment thesis, was there a specific desire to invest in the early stages? I've seen a lot of the corporate venture groups have migrated sort of earlier in the innovation cycle from, passive roles at the Series C and Series D levels to now, just over the last 5 years, many corporate venture groups looking at not only participating, but even leading rounds in the Series A and Series B. Can you talk a little bit about, kind of from a stage standpoint, the investment thesis and how, what was the objective there as it relates to, the corporate venture activity at TR in the early stages?
Yeah, it's a great question. I think there are a couple of points on why we're focused on Series A, and just so we're on the same page, we can size up and size down for the right investment opportunity. Series A is really the focus where we think the majority of our investment will ultimately be. The reason why the focus on Series A is because for the fund size and the check allocation size, and to get a sufficient level of distribution across a portfolio, we felt Series A was the right size for the checks that we wanted to write relative to the size of the fund that we're willing to invest. So that's one. Two, it's company maturity at the Series A level is at the appropriate level, we feel, with companies that are Series A companies are more mature today than maybe a typical Series A company might have been, 5 years ago or so, especially in enterprise technology. So we wanted to focus on companies that had the right level of maturity, so that when we were putting a strategic plan in place to figure out how we can connect our assets and expertise to that company, that they were at the right level of maturity to be able to take what we're able to do for them and run with it, right? So
So was this about accessing innovation? Was this about acqui-hires? Was this about accessing new revenue streams, products that would fit with your existing portfolio? Do you guys have a way of thinking through that by stage? How do you think about that?
Yeah, I mean, we consider all of those areas. I think first and foremost, the reason for the fund is to bring signal back into the corporation from what's happening in the market around innovative companies and technology and business models that are new and interesting in the markets that we operate in, or things that you might consider adjacencies. Ultimately, what that does for us is it puts us, TR, when I say us, TR, in a better position to serve our customers. And that's the kind of one thing that's been pretty consistent through my time at TR, laser focus on our customers, and ultimately we're a financially focused fund with the strategic alignment to TR, but it's all an overlay for how we can better serve our customers.
With regard to industry focus and reviewing the information on TR, you've got a broad lens across a lot of different industry sectors, right? Legal, tax, accounting, risk, fraud, compliance, news media, a lot of different areas. We, at Impact Venture Capital, our industry focus is almost by industry segment and by market. So we look at it like, artificial intelligence companies applied to deep tech and enterprise and consumer and infrastructure. I mean, that's kind of how we're segmenting the marketplace of opportunities. Do you, when as part of your investment thesis and the industry sector focus, are you sort of thinking about it by technology or by these, these areas where you're playing a corporate leadership role? Talk a little bit about your industry sector focus.
Yeah, so I mean, the answer is a little bit of both. The reason for the industry focus is because those are the areas that we operate in at the corporate level, like the areas that you mentioned: legal, tech, tax software, fraud, risk and compliance, news and media. Those are where we have our core businesses. We look at those markets because those are the markets where we have the assets and expertise to accelerate the companies that we invest in. And we have a ton of like organizational competencies around machine learning, AI, data collection, curation, and adding value to data. There's a lot of things that we do as a business that we think we can take and help companies get to the next level of maturity. So that's kind of why we focus on those market verticals that we do. Now, on the technology side, we look at it, I think, through both lenses, right? We would kind of put a 2x2 matrix together and think about, what technology has, a horizontal applicability across the markets that we serve. But where we see a lot of the value coming, especially when it relates to things like machine learning, is having a deep verticalization and a deep expertise that is built into those companies. And, I think some of how that plays out, some examples of that is, essentially thinking about how you can take a knowledge professional, and I use that term fairly broadly, but what I mean by knowledge professional is someone who has some level of expertise, whether it be a law degree, accounting, financial, and taking that expertise and applying it to machine learning in a very specific and targeted way.
Mm-hmm. Understand. So it feels like you learned a lot in working at. It sounded like you rattled off 3, 4, 5 different business units that you were a part of. Is business unit sponsorship required as part of any TR Ventures investment? How are you working with your colleagues internally to get sign off on sort of outside investments that you're making?
It's not required. We have our own independent investment committee. It's myself, Tamara Steffens, who's our managing director, David Wong, who's our chief product officer, and Pat Wilburn, who's our chief strategy officer. So between the 4 of us, that's the investment committee. Now, we work with everyone across the business, whether that be an internal function or go-to-market facing business, to build in the strategic thesis that we develop when we make investments, because ultimately, I think that's a key aspect for how we can be successful. I found that if you were going to just like develop a strategy in a vacuum, whether it be kind of like a venture-based strategy or even just a strategy at a corporate level or a strategy for a startup, if you develop it in a room by yourself, the likelihood of being able to execute on that strategy is significantly diminished, right? But if you develop strategic initiative, strategy, M&A, market entry, whatever it is, if you develop it with a group, and that doesn't mean like asking permission from 20 people. It means giving people equity in the decision-making process, letting them input, letting them have, letting them bring their point of view to the table, and then being transparent with your decision-making process. You significantly increase the likelihood of being able to execute on that strategy. And there's no point in making a strategy if you can't execute on it.
I completely agree with you. In fact, over the summer, we just went through an internal strategic planning exercise where we brought together not only the general partners in the investment committee, but our entire sort of venture partner group to have everybody put their color on the masterpiece as it relates to the investment thesis. And I think we got to a better answer. As it relates to your ventures, when you think about outside investments, I've seen a blend of corporate trends. Some corporates operating independently, even branding themselves independently, and no business unit sponsorship required, effectively really just investing for purely investment returns, in some cases making competitive investments, others exclusively looking at strategic value, even if it sacrifices returns a little bit, and then some in the middle, kind of a hybrid of both. Where would TR Ventures fit in that framework?
Yeah, like I don't know that framework is a something I would totally co-sign on. I think the best way to bring strategic insight into a company, from my point of view, is to make a financially successful investment, right? Like I struggle with the idea that you can make a strategic investment that isn't financially successful. Now, different things work for different people. For us, we are a financially focused fund, but we have a very strong belief that to be successful, we need to bring that strategic insight into the company. We need to bring the signal into the market about what's happening, what's relevant, what's successful for new companies being built in the markets that we serve, and ultimately that serve our customers. So I think the best way to answer the question is, it's a financially focused fund where we work very, very hard to build that strategic thesis for the companies that we invest in. The other thing from the company's perspective, that's a big reason why we can get onto a cap table, especially when it's a competitive situation. When we are able to come to the table and say, not only are we going to write this check or make this investment in you, but we're also bringing very well-defined channel directly into your core target market. And, we're going to help you facilitate a relationship with, our go-to-market organization in that channel. Or, we have a really strong core product in an adjacency. But what we think might be really interesting is if we were to integrate your product with our product, and then that combined value proposition is something that ultimately serves our customers in a way that's much more effective for them. So that makes us infinitely more valuable on the cap table.
It sounds like the value beyond capital by TR Ventures in these investments includes maybe market insight, potentially product integration, and then accelerated path to customers. Is that how you would, you
Yeah,
know, yeah.
totally. But we think about it, we think about it across a fairly wide spectrum. And, we almost in every deal, we look at it, and we actively engage with the companies we invest in to help create the strategic thesis. So yes, it can be product focus and integration focus. It can be go to market oriented. It can be both. It can be something as simple as, what would be really strategic for Thomson Reuters? Just buy our product. We've invested in one company on the data infrastructure side where we think that they can significantly accelerate our internal data lake strategy, and we'd be a marquee customer for that company. That's a huge strategic value for a company in the early stages.
Assuming this gets viewed by thousands of seed stage, early stage technology entrepreneurs, can you talk a little bit about kind of the characteristics or qualities of sort of the entrepreneurs that you like to invest in, and maybe even the transaction type, if there's something specific that you target, product market fit, early revenues, anything that you sort of look for as entrepreneurs watch this and hear about your description of TR Ventures and particularly your value beyond capital and get excited about sort of bringing you in as an investor in a syndicate. What are you looking for in them?
Yeah, look, we're a Series A focused fund, so we like to invest post product market fit, where there's some level of significant revenue, which we define as somewhere in around $1 million in ARR, 1 to 5 million in ARR kind of feels like the sweet spot for a Series A these days. Now, that's not to say that if you're not there yet, we don't want to hear from you. We're happy to build relationships with companies that are earlier stage. But in terms of what we're looking for enterprise technology companies that are interesting to the areas that we focus on, those market verticals, areas where we can bring strategic value, where we can accelerate them. And what we like to see in founders is when there's a team that has a unique circumstance around what they're building and why they're building it, where they have experienced the pain that their customers have experienced, as an example, and then something that makes them uniquely qualified to build the company that they're building. That's a strong set of signal that we look for. The second is we're looking to be active investors, so we want to be an active part of the strategic plan for the company. So we want folks that will be open to working with us and working towards some of those objectives. We think it's an important angle. And then the last part that we think is super important is just a level of transparency. Like like I said, we want to make sure we're the right investor for the cap table. We don't want to be on a cap table if we have to kind of convince our way onto it, for lack of a better phrase. We want to be there when the founder and the founding team recognize the value that we can bring, and that they're ready to kind of work with us. And frankly, a level of transparency. We're super transparent. If we're not the right fit, if we feel that, we'll pass very fast. We won't waste time. We operate very quickly. We're trying to be as transparent as possible, and we think it's important for founding teams to be as transparent as they feel is prudent.
You're targeting board observer roles, board roles, just play an active role as a shareholder.
Yeah.
Talk a little bit about sort of your objectives from a board composition standpoint.
Yeah, we are happy to take board roles. We only do it when the founders ask us to. So it's not something we insist on. But we're always happy. Every single time we've been asked, we've always said yes. And we never force our way onto doing that. And the other thing is, it's not only the investment team that we can bring to the table for board observers. We can bring people from the business. We have a ton of experts across TR who have made really, really great board observers, where they're just absolute experts in the markets that companies are building businesses in, and having them in those conversations, those board conversations, is super valuable.
We've had at Impact Venture Capital, we've had the benefit of working with a large number of corporate co-investors and then some acquirers. So over the years, we've had the benefit of making these seed investments, helping the companies to grow, and then help those companies attract capital and interest from globally leading companies like Zoom and Intel and Baidu and Yamaha and SK Hynix and a number of others. Obviously, we had the benefit of Thomson Reuters coming in and acquiring one of our portfolio companies, which allowed us to develop a relationship. When you think about working with traditional firms, is it mostly looking at an acquisition of a venture fund's portfolio? Or are there other ways in which you're working with the traditional VC community?
I mean, the way we work with traditional VC communities, collaboration on deal flow. It's one of our main ways that we look to generate deal flow. So we're constantly talking to investors to understand what they're looking at, what trends they're seeing in the market, what companies they're investing in, frankly. So it's a big part because we're generally investing as part of a group. So having those relationships has been just super valuable for us, and it's like a big part of our strategy going forward as well.
TR Ventures is the group that's handling both investments and acquisitions, or are they two separate teams?
No, so TR Ventures is just the venture investment arm.
Yep.
So that's we're a smaller team. It's just the $100 million fund for TR. Our corporate strategy team, which all rolls up to our chief strategy officer, Pat Wilburn. They're the ones, and our corporate development team who handle the M&A.
And for TR Ventures, you talked a lot about and described well the kind of the stage and sort of key metrics that you're targeting. Can you talk a little bit about ticket size? Sort of what's the typical check size that you're writing for a Series A investment, and what's the typical round size?
Yeah, I mean, it depends, right? It can vary, especially lately. It's been fairly varied and somewhat fluctuate. But Series A, typical check size, 3 to 5 million.
Yeah.
And we're investing in rounds anywhere. Generally, I mean, honestly, it's pretty wide. Anywhere between 20 million and 200 million, frankly, is what we've seen. So, but the more important part for us is actually getting the right percentage of ownership to make it worth the effort that we put in from a strategic standpoint. So, we're not overly sensitive to the check size or the round size. It has to match the maturity of the company, generally the progress of the revenue and growth of the company. But we'll size up or size down, like I said, for a company that's a strong investment. And we typically look for 5 to 10% ownership positions when we make investments.
We had an opportunity that was fun and productive along the way. We engaged with John Koss as he launched Ponderosolutions in the early days, took him through an accelerator program, and then ultimately participated early in that investment. He and his team grew that company up, and ultimately it was acquired by your company, Thomson Reuters M&A team. I thought it was interesting to see sort of this company and the sort of really the identifying fraud, waste, and abuse with cybersecurity solutions in the government channel, just really go in and dominate that market niche and create a successful company. At a high level, were there any motivators or other details with regard to that acquisition that you thought made it interesting and relevant to TR?
Yeah, look, I mean, my role prior to this, I was on the M&A side of things. So I mean, this is an area that is near and dear to my heart. We have at TR, especially on the strategy team and on the product team and on our go-to-market teams, we have folks that they have their finger to the pulse of the markets that we serve. They have extremely good relationships with our customers. And when we look at companies to acquire, we think our advantage is in our understanding and reputation in the market, right? Because of the way our customers think of us as a strategic vendor and as a trusted partner, we have a ton of conversations with them all the time to understand what companies are interesting and could be potential acquisitions. So it's not the only thing we talk to them about, obviously, but it's one of the byproducts of having those types of relationships with our customers. And so when we look at the potential for M&A, We love to see high growth for sure, strong reputation with our customers. We love to see that. And we want the companies that we acquire to align with the strategic direction that we're going in, right? We think about it in a similar way. We build that strategic thesis into the companies we acquire the same way we would do if we were just kind of making an early stage investment. So there's some similarities there. But when we look at Pondera, all of those things were true. So the acquisition made a ton of sense, and I think we're just super happy with how that's gone. And the team has been great. And I think once after having joined TR, a lot of the folks that were part of that business have taken on bigger roles at Thomson Reuters. So that's something we're proud of as well.
Oh, it's fantastic. With regard to the next couple of years, anything you're super excited about? Any technology, industry sector? What might you be looking to invest or acquire in the coming couple of years? I recognize you're active on the TR Venture side, but anything at a high level that we should look out for to bring relevant opportunities to you, or that you'd like to communicate to the community of entrepreneurs as they try and figure out how they might be relevant to your long-term strategic plans?
Yeah, I mean, from a TR Ventures perspective, when we're thinking about how we invest in these early stage companies, some of the technologies that we're super interested in are machine learning, task and process automation, anything that is taking maybe it was like a manual or kind of outdated process that happening in spreadsheets or email, and codification of that with the addition of that expertise, that's done with technology in a way that's automated, something that's core to the way people work, transforming the future of the way that professionals will go about doing their work. Lawyers, accountants, financial professionals, data scientists, engineers, anything where machine intelligence is having to kind of level up to address tasks and processes that require a higher level of sort of cognitive ability to solve. Those are areas where I think we're going to be focused over the next few years as we make those early stage investments.
Fantastic. All right, you ready for the rapid fire Q&A session of the program? We got just a couple minutes left.
Yeah, I'm ready to go. Shoot.
All right. So you're high performing investor at a major corporate venture group. How do you, for those that are in the, looking at the venture industry and getting into corporate venture, is there anything that you do to sort of, operate at a high level from a professional excellence standpoint? Any professional development ideas or advice? What do you do to sort of stay at the top of your game?
Yeah, I think you might find my answer boring, but it genuinely is the number one thing that I do that I think drives consistently high performance is sleep. I am very, very, very disciplined in my sleeping habits. So I go to sleep early. And
is this at the office? Joe, is this at the office, or do you wait till you get home?
Right. Are we recording? Because I don't know if I want to get. Yeah. No. Yeah. Going to sleep, getting the right number of hours of sleep every single night. It's like a performance enhancing drug.
That's awesome.
Yeah.
Well, and when you wake up in the morning, I guess any morning routines that sort of help you to bring your A game to the office, put you in the right mindset, sort of enable you to sort of filter information through in the right way as the world sort of throws a lot at you. Any morning routines that help sort of optimize your day?
Yeah. So I don't know if it's so much in a morning routine as it is more of a requirement for myself. I noticed that my mental ability, there's a steep drop off after, let's say, mid-afternoon. So anything that requires like thinking or writing or like intense reading, I have to do in the first half of the day. So I try and get an early start and load up that part of the day with things that require kind of a lot of mental energy, and then I leave kind of the back end of the day for like meetings or conversations or like interviews. So think things where I can kind of just come and show up and try to hold on mentally.
That's great. Favorite blog or podcast or publication, something that you find yourself regularly drawn to and reading or listening to?
Yeah, so I am a massive consumer of this type of information. So it's going to be hard to say one, but I listen to 20 minute VC with Harry Sebbings. I listen to Village Global podcast. I used to listen to the A16Z podcast, which I'm very sad has been on hiatus for a fair amount of time now. Strictly VC is great. Workbench, which is an early stage seed fund in New York, has a great newsletter that I read all the time. So I highly recommend that. But yeah, I have a whole bunch of stuff that I listen to.
All right, last question. My next trip to New York. What's your favorite restaurant? What am I missing out on? Which restaurant should I be going to? What's your favorite there?
All right, first thing you have to do, you call me up and I'll meet you. We'll go to Williamsburg, Brooklyn, and we'll go to La Nonna, which is an Italian restaurant right by the water. There's a nice little outside section. We get a nice table. We'll have a nice glass of wine. They have all types of different pasta, all types of different meats and cheeses. It'll be great. La Nonna in Williamsburg for sure.
Count me in. Count me in. Thanks so much for allocating a little bit of time of your afternoon. Really appreciate you sharing both professionally and personally some of the things that you're doing. Thanks for providing a little bit of market insight on kind of the key industry sectors and stages. This is super helpful, Joe. Really appreciate you taking a little bit of time.